Hey, what's up guys? John here. The tide turns for renters as asking rents post their biggest decline in 3 years. The bubble in multifamily, in real estate, is popping for investors that are hoping to secure a high-paying tenant. Instead, what we're walking into is an apartment boom, a 50-year high of new construction apartments coming up nationwide that are set to hit in 2024.
New apartment construction is soaring across parts of the United States.
And real estate experts say it is now on track to be, in fact, a 50-year high.
We're going to see so much new inventory hit the market. At the same exact time, millions of investors overpaid for Airbnbs, second homes, and new primary residences, thinking the economy is going to continue to flourish. And instead, they're underwater on these properties, and now they have no choice but to rent them out. We're going to see so much inventory hit. And because of this, we're going to start to see rents continue to soften.
Apartment rents have been cooling off sharply for several months now.
And at the same time, mortgage rates are doubling, going from 3% to 7%, 8%. What are we seeing here? A lot of these commercial landlords are going to have to refinance into this environment. It's just going to be a bloodbath for them. But it's going to be a massive opportunity for you. If you're a renter or if you own a property and you're looking to get a second home or a third or fourth or triplex or fourplex, you have a big goal. Pay attention to what millions of people are going through right now to position yourself for this massive wealth transfer. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's happening in the real estate market. And if you'd like to fix your credit to position yourself for this massive once-in-a-lifetime opportunity, go to GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item under credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So the tide turns for renters is asking rents post the biggest decline in over 3 years. Came out today. Redfin. The median U.S. asking rent fell 2% year over year in November, the biggest decline since 2020. The rental market is softening so fast in some pockets of the country, landlords are offering concessions, right? First month free, last month free. And you might say, John, it's not happening in my market. Do your research. Look in your market. I can promise you'll probably find a bunch of concessions happening. They're popping up quietly. Your landlord's not going to go knocking on your door telling you, hey, I can give you last month free if you want it. What's happening right now, landlords are desperate to secure tenants to lock them in on a 12-month or 24-month lease. And because of this, they're doing what they have to do to get that peace of mind. When they have to refinance, they want to know that they're going to have that income coming in. They want to make sure they're going to be able to try to fight through this storm. This is what's going on. And, interestingly, a lot of landlords have never been through this. I mean, because it didn't happen in 2007, 2008. It's the insurance rug pull. If you look at what's going on here, and this is in Daytona Beach, so Florida, right? Florida is 500% property insurance hike, right? This came out about 5 days ago, 6 days ago. But nationally, according to industry experts, commercial property insurance rates have spiked 25 to 100% over the past year, depending on the type and the location, right? Deductible is also higher in many cases. So you have a situation where insurance is going through the roof and taxes have increased 4%. So you have insurance and taxes going up, rents going down, borrowing costs going up, and you have more inventory hitting the market by the day. You think about what this means if you're a leveraged landlord. It is a very, very, very big problem. And when you look at what happened, this is CNN, right? CNN 2008. You look at what happened in 2008, because many people say, John, during a real estate crash, what happens? People can't afford to buy, and because of that, they have to rent, and because of that, rents go up. Well, look at this. In 2008, they discussed, the same patterns here, which is, investors were buying properties, and like right here, they were buying properties, and they couldn't escape the market. The investors bought condos and other properties, and they were still in development to try to sell them. Other investors bought existing single-family homes or properties intending to do a cosmetic improvements and then sell them at a profit. But before they could do that, the slump hit and the home values dropped. Instead of selling them at a loss, they decided to rent them out, right? Same thing that's happening. Of the 10 areas by Rentometer, Atlanta and Houston rents declined the most, plunging 12.8% for the year. Median monthly rent for all rentals in Atlanta is now $884. In Houston, $779. The New York Metro had the highest median monthly rent in 2007 at $1,729 and posted the biggest increase in 12.8%. San Francisco, it grew 8.5% to $1,685. In Boston, it rose 6.8% to $1,528. But if you look at what happened in San Francisco, they've essentially destroyed that economy. A lot of business owners are leaving San Francisco. Crime's getting out of control, and rents are falling in San Francisco dramatically, right? So you're seeing different trends that are happening. San Francisco rent grew, right, back then. Now rent's not going to grow in San Francisco, at least in the short term. It's not looking like that's going to happen, right? But overall, rents softened. They softened in a very, very, very big way. Now, when you look at what happened in the real estate market, more than 40% of U.S. mortgages originated between 2020 and 2021 when interest rates were near zero. So what are these people going to do if the average first-time buyer puts 6% down and it costs 8% to sell a property? You're paying 5% or 6% for realtors alone, plus transfer taxes and closing costs. They would have to come out of pocket if the property is worth what they paid in 2020 or 2021, which most likely it's not. They're most likely have lost value. So they'd be coming out of pocket pretty substantially to sell. So they're going to do what they have to do to rent them out or give the keys back to the bank. But this is going to be the very interesting aspect that we've never seen before. This $1 trillion wall of worry, commercial real estate that spirals through 2027. Now the $1 trillion, by the way, is just next year. If you look here, it shows you commercial real estate sector faces another wall of maturities, $2.75 trillion by 2027. So next year, you have $1 trillion, $1 trillion worth of commercial loans. And so to put this into context, they say here, the entire value of the real estate market for commercial property is $20.7 trillion. 20 trillion, right? So if you have 2.7 trillion, that's 1 out of every 10, right? So 1 out of every 10. So that's 10%. So if you just look at any block here, let's say there's probably 500 properties here, you have 50 of these, right? That would have to, go back and try to get a new loan, right? In just the next couple of years. That's just on this one row. If you look at every single row and you start to realize this is going to be going through every single city in the country, you have to realize this is going to be a race to the bottom, right? This is going to be a race to the bottom. And when you have banks that they're not going to lend as freely as they did in 2020 and 2021 and 2022 due to policy restrictions, due to the bank's balance sheets, due to a lot of their bad loans, it's going to be a big issue for a lot of these banks. And that's why when you look at, what Blackstone is doing, and you look at what a lot of these big entities, these KKRs, these Starwood Capital, all these large hedge funds, what they're doing is accumulating pools of capital because they know banks won't lend, and they're going to want to go out there and they're going to want to lend on these assets, take first position. They're going to want to buy these properties. We're walking into something massive here. We're walking into something massive. If you are a renter, you have to realize that the pain is going everywhere. It's not just going to be these massive skyscrapers. Sure, you're going to see a lot of pain there as well, but the pain is going to be coming throughout the entire economy. And so you want to put yourself in a really strong position to be able to pivot and move during these very, very, very uncertain times. This is why I believe we're going to see so many landlords, so many property owners desperate to secure a tenant that's going to pay rent. We're not going to see rent growth at 10, 15, 20%. We're going to see rents continue to soften and do so in a very, very, very big way. Big-time landlords have begun surrendering office buildings and other struggle property to lenders this year, when just a few years ago they were fetching sky-high values and super low rates. Many consider the start of the reckoning for the estimated $20.7 trillion commercial real estate market, likely the biggest test of confidence since 2007 and 2008. It's going to be worse. It's going to be worse. It's not even a comparison, in my opinion. It's not even a comparison. I believe if you are someone that has some really, really big goals, really, really big ambitions, you want to build out a roadmap and a framework today. You don't want to ignore what millions of investors, property owners, and landlords are going through right now. You want to understand this because if you look at a billionaire investor like Sam Zell, for example, founder of Equity Residential, he passed away 6 months ago. Equity Residential, Equity Office, he is a strategist. What he did during the great financial crisis that nobody else did was he started investing in mobile home parks, realizing that it's going to be a race to the bottom. Most people are not going to be able to afford to have their own, home. They're going to be forced to rent in mobile homes. So what they did was they raised a ton of money. They went out, bought mobile home parks throughout the country. They got a 1,300% return on their investment over 10 years. They went out there buying tons of mom and pop mobile home parks all throughout the country, right? He got a nickname, the Grave Dancer, because he was so patient and so strategic that when he started his career after law school, he got in after everything hit the fan. He waited 1 year. He held the money and waited 1 year and to go out there and buy. And he danced on everyone's grave. Got the nickname Grave Dancer. Incredible story. But that was his strategy. And that's what I think a lot of people should have, that very, very similar strategy. Not to run out there and overpay for a property right now. Realize that a lot of landlords, a lot of investors, a lot of people are in a lot of problems right now. And there's going to be so much opportunity to go out there and pick up 1 deal, 2 deals, 3 deals, or as many as you want coming very, very soon as sellers begin to get desperate as everything starts to hit the fan. What do you think about this situation? Drop below. Let's have a conversation. And if you'd like to fix your credit to position yourself, what I believe is going to be the greatest wealth transfer that we've ever seen in American history. I think it's going to be bigger than 2007, 2008. I'm not saying this to scare anybody, but you don't get mad at the weatherman if he tells you it's going to rain tomorrow, right? This is what's happening. This is what's going on. Drop below. And if you want to fix your credit to position yourself for the greatest wealth transfer in American history, if you have credit issues, we'd love to help you. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com, click the link in the description just below this video to schedule a free strategy session. Catch you in the next video.